Welcome to this panel session at Genesis on Around the World in Venture Capital. We have a fantastic panel today, which is being represented across with Arix Biosciences, Novo Holdings, Sofinnova, INKEF, and Life Science Partners LSP. Welcome, everyone. And I'm Supriya Mathur. I'm a director at Optimum Strategic Communications. We're a communications and investor relations agency working across the spectrum of healthcare, from small companies to large public-private, as well as with funds that invest in the space. I thought we could start with a quick introduction with everyone, and maybe we just sort of go clockwise, and maybe John, if you want to kick off.
Sure, thanks, Supriya. My name is João Cassidy. I'm a principal at Bioscience, which is a biotech venture capital group headquartered in London with offices in Munich and Boston. We're a transatlantic VC investing in therapeutics across those geographies.
Anna, would you like to go next?
Yes, thank you, Supriya. Thank you for having me. It's a great pleasure to be in this panel today. My name is Gkelou, and I'm a principal at Sofinnova Partners. Sofinnova Partners is a leading European venture capital firm with offices in Paris, London, and Milan. We invest across the life sciences value chain, from very early stage preclinical discoveries all the way to clinical stage, late stage private companies, but also public companies. We have backed up 500 companies in the past 50 years, and we've got 2 billion euros under management. We do our investments solely, or also we syndicate and co-lead, but we do also a lot of early stage company building and value creating, de-risking, heavy lifting, as we call it, seed financing, and we often do those on our own. We focus on finding and investing in breakthrough scientific discoveries that can transform the standard of care across all different therapeutic areas. But we also focus on finding and investing in visionary entrepreneurs that can transform those discoveries into therapeutics. My pleasure to be here. I look forward to the discussion.
Thank you. Thank you. Karin, would you like to go next?
With you and hear you today. I'm Karin Kleinhans, investment manager at LSP. LSP is one of the older and by now the largest healthcare investor in Europe. We have offices in Amsterdam, in Munich, and Boston. Have invested over the last 30 years in over 120 companies, building out biotechs as Argenx or Zealand Pharma, but our home region is Benelux and German-speaking countries. We do invest in public listed entities, but also in private companies across the e-health, medtech, and biopharma spectrum. Very happy to meet you today.
Simone, if you go next, and then João.
Hi, thanks for the opportunity, Supriya. My name is Simone Botti. I just joined in October INKEF as a junior partner. INKEF is a leading European VC investor. We have 500 million under management, and we are divided into practices, healthcare and tech, which allows us to also span the spectrum from everything in life sciences, from biotech therapeutics to medtech to digital health, across all of the value chain. We specialize in early stage investments where we syndicate with other leading VCs. We also do a lot of our heavy lifting and company creation. And very happy to participate in the panel and see how the discussion is going to pan out.
Hello, everyone. Thanks, Supriya. Pleasure to be with all these very well-known faces in the VC community. I'm João Ribas. I'm an associate within Novo Holdings. We're a big life science investor with offices in Copenhagen, London, Boston, San Francisco, and more recently, Singapore. We invest across all stages of company development within life sciences, and we do this across different teams. I'm part of the Novo Seeds team, which is the early stage company creation team and early stage investment arm of Novo Holdings. And it's a pleasure to be here with all of you.
Thank you, everyone. Just to sort of kick off the discussion, I think this has been a landmark year for life sciences, and I think nobody will argue with that. I think despite the shadow or even with sort of COVID, funding in the sector, progress in the sector has been, unprecedented. An all-time high, and I think there's some of Genesis will also refer to the DRG Clarivate report, which looks at, financing in the sector, as well as deal making. And up to Q3, I think what we've seen is this has been a bigger year than previous years, previous full years, even up to the end of Q3. And I think this is where we wanted to kick off the discussion on a few things. Why do you think this is the case? But under the circumstances, how has your experience been in terms of investments, meeting companies, as well as managing existing portfolio companies? So should we start with John? And then maybe we can sort of pass on the same sort of.
It's there's a lot to cover there. I think it has been a pretty incredible year. I think it's surprising somewhat to see just how successful funding environment has been for biopharma and healthcare more broadly. Although I think a lot of it has to be taken in the context of money raised by investors ahead of COVID. So a lot of the large VC funds were already well underway with their fundraising, already pretty close to closing some large funds. So a lot of that dry powder that is available was sort of pretty much in place before COVID hit. That said, I mean, unlike other sectors, I think biopharma has been very resilient in the face of COVID, partly because the work that we do and the work that the companies we support do is considered essential, and so those companies are able to operate, but also they're not looking at very short-term metrics like revenue, month-on-month revenue or profitability, as an indicator of the quality of the companies. They're looking at data generation, which takes a lot longer. It's much more fundamental. So I think what we saw in our portfolio was, pretty soon after, COVID announcements, WHO declaring a pandemic, we took stock of the portfolio and had a look to see where, which companies really needed extra support, which timelines were going to be pushed out, how it's going to affect clinical trials. And we probably took about a month to 2 months just really focusing on the existing portfolio, not really looking at anything new while we took stock of the situation. It quickly became apparent that most of the companies were pretty resilient. So, we made some additional reserves for some companies, but then went back pretty quickly to, considering the opportunities and meeting companies virtually, which I guess is the big theme for this year, is that, a lot of the interactions we've had have just switched to being virtual, which has been pretty seamless. I mean, there's obviously some things you can't recreate, but a lot of our first interactions with companies would be virtual anyway, given that we're a transatlantic VC. And I'm often meeting US companies or continental European companies anyway, which is, rarely in, face-to-face meeting for the first meeting. The impact on conferences, I think, has been pretty marked. I think we're all pretty used to a different format now, which, although can work pretty effectively, it does limit the sort of serendipitous moments that you can find, bumping into someone or just meeting someone over a cup of coffee and finding out more about what they're doing. So, I think we have found this year to be surprisingly efficient, but, there are still things that are missing. And I'm sure everyone else has the same experience, but for example, investing in a new company without ever meeting the management team in person is something that we have done twice in the last 3 months, and it's a very different experience. And I think we're still getting used to that. But I'll pause there and let someone else give their view.
Ada, do you want to go next, and we just sort of follow the same circle?
Sure. I think it is very clear that healthcare investments have remained strong during the pandemic. And I think healthcare as a sector, it's historically been resilient to uncertain and recessional times, and investors know that. The pandemic specifically, I think, has brought the attention back to public health and has brought back public health on top of the pyramid of public needs where it should be. COVID-19 has also, I think, shown the important role that small size, mid-size biotech companies play in drug development. It is the Modernas and the BioNTechs of the world that will help us find a cure for this. And to add to that, I think what has been also very important to note is how key is collaboration and partnerships between biotech, biopharma, mid-size with large pharmas. And those collaborations have led to an extreme acceleration of drug development. You know, vaccines in the past would take us years to develop. Today, we've developed vaccine in a matter of months. So I think that's a second learning and a very impactful message for the future of drug development. At Sofinnova Partners, we have been very active during the pandemic and the lockdown. And we believe very strongly that biology is something that we all have in common, regardless of the country or the corner in the world we live in. And through science and through biology is how we can develop new products to treat patients and save patients' lives. So we think that after the resolution of the pandemic, healthcare investments will remain strong. During this time, we have seen 48 transactions. We've done 15 new investments, and we've seen a big contribution as well, an acquisition by of Corvidia by Novo Nordisk. I think for the new companies and meeting new teams, you know, innovators, they always find the way, even in times of crisis. Biotech companies are adapt and are very responsive to changes. We have generally benefited from long-standing relationships we have with entrepreneurs and our network in Europe, but also in the US. And I would agree with John that you know, the limited traveling has been difficult for everyone to build new relationships. We have managed to make decisions in this virtual world. We have managed to use the tools that have advanced so much in our benefit as well. I think overall, this pandemic has shown the importance of public health, and the equity capital market has really reflected on that.
Thank you. Karin, I know you had some thoughts about this in terms of, you know, how different it's been for you.
Yes, thank you, Supriya. So we have currently 5 active funds. That means we have a very big existing portfolio. Shortly before COVID hit in March and we were forced all into lockdown, we announced the final close of LSP6, which is the largest European fund with $600 million in size. And that brought us up to almost $1 billion of fund sizes that we have raised in before COVID. So what we believe is that the continuous nurturing of the European eco environment and the investors that we have done over the last decade, together with seed funds, together with the larger crossover funds, together with government initiatives and the incubators that are sprouting everywhere, we have seen that there are much more young companies that are now ready to look for funding. But at the same time, also this nurturing of the eco environment has, I think, matured our sector in Europe to a level that is quite comparable to the US, and has also helped us in raising bigger and larger funds over the years. And that is something that is now executed, I would say, in the COVID crisis. We are ready to face such a crisis because the biotechs, as Anta said, BioNTech and Modernas, they have been nurtured over the last 10 years to be ready and execute on such a crisis. And this is something very, very nice to see from our perspective. Personally, in LSP, we were very much involved in existing company management. And what we have seen is that being there in the last crisis has helped us to prepare better for today's crisis in terms of runway generation for the companies and also implementing the emergency protocols and decisions we had to do. We also have seen that the companies are very resilient, and in times of Zoom meetings like we have today, we realize that communication is more important than ever. Communication with our investors, communication with our networks, communication with our partners, communication with our portfolio companies, with new companies that approach us. I find it personally very nice to have Zoom calls because you see a little bit more personal aspects of each person. Everybody has a different room, and maybe the cat is running through the video. So it makes it a little bit more close, as in terms of a business meeting in a hotel or wherever, where you are, you know, more business-like. You bring the personal into the discussion, which is very important in our industry, because it is health that is our subject, and the health of everybody is the goal that we want to achieve together. And I believe that this pandemic has shown that first, we are ready to execute on problems in a fast time, but also that our market and our environment is maturing in a way that we can communicate and then also invest and execute. But we, as a LSP fund, we have done few investments during this last COVID period, simply because we have our new fund almost half or more than half invested. And we have not invested in, I think, one company in one fund where we have not met the management team. This is not to say that we are not excluding it. It is just to say that communication is so important, and it just takes longer to get to know people over Zoom and get comfortable with the team, the programs, and also syndicate with other.
Thank you. That's really interesting. And on that point, I think maybe Simone, this is perfect because you've actually started a new role, right, during the pandemic.
So half of my first year was spent being the CEO of a startup in Israel called Metabomed that had just finished raising a total of 30 million euros. And that was a raise that we just closed at the last JP Morgan in 2020 of 12.5 million. And now I've just joined as a junior partner. So the pandemic hit me and hit my company when we were exposed in terms of our process mainly towards China, because most of our medicinal chemistry was done there. And when China completely shut down, we were wondering whether we would have to rejig everything and we would be able to perform. And it comes out that actually China was extremely efficient and our CRO was extremely efficient. So we lost only 1 month of work. But when we were talking to our investors, suddenly the investors, and we were going to go for a subsequent round, suddenly our investors actually had a moment of panic because they did not know what was going to happen. And when the Dow Jones cratered completely, they just went screaming out of the hallways with her hand raised. So the whole point that I want to make is that in the end, looking at it from an operative perspective, what John said is very true. Companies, especially in the therapeutics and biotech sector, were not exposed to serious disruptions in, let's say, the manufacturing chain, because all of those companies were deemed essentials, or because during that time they were able to put in place some business continuity models. VCs never had a business continuity model. This hit investors with absolutely no playbook. And the interesting thing is that because of the nature of our companies that we invest in and the nature of our sector, where, as John said, the data comes in times that are much longer than it took people to adjust to a new normal, the disruptions that we saw were mainly emotional. We did not know if we were going to meet companies or investors the same way. We did not know if we were able to make a personal connection. But in the end, the underlying fundamentals were still chugging along nicely. It's been 3 flagship years for health tech investment. Nobody was expecting 2020 to be less. The interesting thing is that it was more. So what happened? We were able to smooth over the bumps because the inertia of the sector in any case helped us with the timing. A lot of companies didn't fall off a cliff. Some of them had the delays in their clinical trials and the recruitments and all of these things. But people already adjusted by the time that the companies were able to put their plans in place that, of course, were not there before. We just had to do everything while we were just doing it. There was no playbook. Investors realized that some things that we were used to, actually, we don't need to do. We can meet people over Zoom. We actually can build trust over Zoom because our companies are based on data. If we want to create companies, that becomes a little bit more different. We have to do them from scratch. We have to understand how the team is going to be built. And at INKEF and when I was in Metabomet, this is something that we did, and it's something that had a bit of challenges because you really need to be able to see how people think and how people are going to interact. But for portfolio management and for deals that were already in due diligence or where the companies have already established and they have a track record, in the end, we understood that we can deal without meeting them face to face. And this is something that I had already experienced because right now I'm speaking to you from Israel. I'm supposed to be in Amsterdam because that's where INKEF is. But COVID has made me a virtual partner where I was the last time the pandemic caught me. So I've been performing virtually for my new employer from the get-go, and probably I'm going to be here until April. So you had one thing that said, how is it hiring new teams? How is it working and these things? So I can tell you that because I have to add something to what the other speakers have said. As far as hiring, for example, we're looking at C-level hires for our companies. And also the investors looked at senior hires for the fund, like me. Everything went virtually. And it seemed to have, I hope I don't disappoint them, but it seemed to have gone well. We're able to do this. So I think that in addition, one of the things that actually we can say is that on top of this, we were able to get something amazing. The fact that healthcare is so important to people, as Anta said, that finally public health comes to the fore, has made people try things that they would have never tried before. mRNA vaccines, Moderna was hit on the head for ages before people thought that this could work. Suddenly, it's going to be what's going to save the world. Meeting by Zoom, not really, and now it's all going to meet by Zoom. So COVID has worked as a catalyst. We are going to be doing a lot of more things. People are going to want to have diagnostics at point of care at home. Because why? Because people needed them. We needed to restart a country. So this is probably the on top. The crisis has spurred the healthcare industry to find solutions fast. And there's places where you can try to get these solutions faster than you ever thought. Vaccines, as Anta said, nobody thought that we could get them in a year. Fast tests, point of care, and digital health. And we can talk about that later on. I'll just give the floor to João so he can contribute as well, and I'll stop talking.
Thank you, João. I think very interesting on that point, because I think you mentioned building teams and cultures and the challenges of that. And of course, it's been a milestone year for you all as well at Novo in terms of, companies raising money, listing, with Gkelou. So we'd love to hear from you on your thoughts.
Yeah, it's been a great year, and to John's point, I think a lot of these funds that have a lot of dry powder, they already had that prepared. So even if we didn't have a pandemic, I think it would have been a great year in terms of investments. And I think other people have mentioned healthcare is a very resilient space, and especially in a pandemic, people realize that this is really important. And I think we'll touch upon later on the public health issues, and we are very keen on the AMR, and we can talk more about that. And I think finally people saw that maybe the next thing is not going to be a virus, going to be a resistant bacteria, and we need to be prepared for that. But in terms of building teams, yeah, it is kind of core to Novo Seeds to create these companies. And a lot of the projects that we've been building this year, it has been with teams that we had been in touch with before, but it is quite challenging to find the right people. They can really move. We have to have meetings over Zoom. And yes, you can start creating a personal relation with these people, but you need to start thinking about how do you build a company culture within these new companies that we create. And that's something of a challenge that we're still trying to battle and face. And I'm sure we'll come up with a solution. As Simone said, we thought we would never do Zoom calls every day, and now we do them. And actually, we're a lot more efficient. The other side of the balance being that we, as John mentioned, we don't meet people socially for coffee, or we just randomly bump into someone that we haven't seen for some time. But I think it's been a very, very active year with its challenges. But overall, I'm pretty confident that that we're going to be able to adapt to this new way of doing things, and that we'll manage just fine.
Fantastic, thank you. Thanks everyone. So to carry on from there, I think one of the things that we talked about was will COVID potentially affect exits, you know, with the government stimulus? Do you think biotechs, for example, or even other health tech and other companies will remain funded and independent? Or on the flip side, do you think pharma will look to acquire, or strategics will look to acquire with sort of delays in their pipeline, trials, etc.? And I think I can, you know, maybe just sort of going back to John, you know, you've had an amazing exit with Velos. So what do you think? Do you think the trend will stay in terms of, you know, M&A or?
Yeah, I mean, it's an interesting question. So, you know, we recently announced that Velos Bio, a Californian biotech that we were an early investor in developing an ADC, got acquired by Merck for 2.75 billion. That, I mean, to me, that firstly, that shows that, you know, pharma is still looking for acquisitions, especially, you know, in things that are not related to COVID at all. You know, this is an oncology company. I think it also shows that there's significant appetite for decent sized M&A out there. This year, in many ways, is no different to previous years, that pharma will be willing to pay for, you know, innovation and high quality assets. The data coming out of Velos Bio was extremely positive, and they just released it at ASH, and that was the data that convinced Merck that this would be a good deal for them. I think the story of large pharma needing to replenish its pipeline is not really new. I don't think necessarily that COVID delaying studies is, you know, a key driver for that. I think it's more inbuilt into, you know, the way these companies operate, and, you know, the declining R&D productivity, which is a kind of long-standing trend, that these companies want to bring in innovative assets where it makes sense to. I guess, you know, one interesting aspect of this is a lot of the really interesting big deals this year have been in very traditionally attractive areas like oncology, rather than necessarily infectious disease or, you know, vaccines. And that's probably, you know, to your point, partly due to the fact that a lot of those companies are receiving a lot of financing, you know, either from governments in terms of, you know, Operation Warp Speed related, you know, funding, or, you know, more local government funding. But also, I think there's probably still a question about how commercially attractive, you know, infectious diseases are. Beyond, you know, the sort of front runner COVID vaccines, which are, you know, they look to be at least commercially interesting for a couple of years. It's hard to see that lots of other infectious disease or COVID therapies are going to be that commercially interesting. And therefore, I think we haven't seen too much in the way of large deals, or at least acquisitions on these things. I think when pharma is getting involved in COVID, in large part, it's kind of reputational and sort of being a good corporate citizen, rather than being driven by pure kind of profit seeking. So I think from my perspective, we still see infectious diseases the way we saw them last year, really, that unless something really changes in the way that these things are reimbursed or that healthcare systems value these innovations, although they're incredibly important, it's a harder investment thesis. So I think exits there. If we do see some exits in that space, I think that will give people a lot of confidence, but I haven't seen it yet. But across the rest of our portfolio, you know, I think we're seeing similar amounts of kind of strategic interest in the areas that you'd normally see in kind of, you know, prior years. You know, it's very much driven by the data, the clinical data that these companies are generating. And I think, you know, we already discussed that the timelines in healthcare are much longer. So people are, you know, a company that looks good today is really thinking about, you know, revenues in like 3 to 5 years, you know, often, unless it's kind of quite late stage. So I think there's a slight kind of disconnect between what companies are looking for to acquire now and the kind of COVID pandemic. At least that's the view I have and what I've seen in our portfolio.
I'm going to sort of follow on to that question, and I know we have to have a longer discussion on sort of anti-infectives. But adding on to what John said, I mean, looking at your current portfolios and the mix, where do you think the trend is going to be? Is it going to be more towards telemedicine or therapeutics? Because I think some of you have, you know, various funds that address different modes and different therapeutic areas. So, you know, Sofinnova, for example, you invest across the spectrum. Do you see that sort of changing now?
Yeah, it's a good question. Today, the investment trends that we're seeing obviously come from different areas and approaches that have, in a deal flow at least, companies and biotechs that have started adapting their approaches towards responding to COVID. So we've seen a lot of companies coming in our deal flow in that space. Got portfolio companies of ours as well that have now a couple of them running COVID trials. On the other end, looking at the trends and the new waves, all this work, fundamental research that has been going on in an accelerated pace for the last year on virology, immunology, local organ injury, but also systemic immunology. I think all those learnings will be translated into finding new approaches for acting on the immune system, but for oncology, autoimmune diseases, and neurodegenerative diseases. So I think a lot of that learning will come into play. So we look forward to understanding all those basic biological aspects of the immune system. On the other end, I wanted to add that today we look at Sofinnova a lot in sort of more advanced technologies. We spend a lot of time looking into cell therapies. We think that they have the potential to really transform disease biology and pathology. So that's a space we're actively looking into. And from the M&A standpoint and what we learned from the strategic acquisitions that have taken place, I would agree with John that everything has stayed the same thirst for the same therapeutic areas. Oncology, obviously. We also saw a lot of gene therapy acquisitions the past months. Again, advanced technologies are still on the top and on the front for new ways to treat patients and save their lives. But overall, at Sofinnova, I think we're looking at the space of digital tools and AI, big data, and diagnostics. We are monitoring and following that space. We're not currently investing in this space. I think it will be an extremely important space that will advance very fast, and that's why we're very closely monitoring it. And it will be very key also to my previous point, drug developments in a cost and time efficient way. All these digital tools are key, starting from biomarkers and patient stratification, accelerate clinical trials, accelerate path to approval, using AI and big data for structure-based drug discovery as well and drug development. These are all key. So large pharma will be looking for those tools, and whether they will be acquiring those or partnering to use those, that's another question. So we are monitoring the space. Currently, our focus is therapeutics, but it's a space that I think will grow a lot. So we look forward to see what's going to happen.
I'm going to flip this a little bit and go to João. João, I know you've had sort of, on the sort of seed side, there's been, sort of a variety of things and different modalities, but also I think there are things like chromologics, where the portfolio sort of, the wider group has sort of invested in sort of the animal-free protein area, or so is that also sort of part of the wider sort of broadening of the biology sort of platform? And I think a lot of people who are listening to this will be interested to know different companies who are not necessarily in pure therapeutics, but they'd be interested to know what are the kind of things that you're diversifying into.
Yep. So we do invest and focus a lot in the therapeutic space and in areas that were already talked about right now by Anta. But we also work within the bioindustrials area and focusing on the topics of sustainability. We've done investments in Chromologics and other companies like BioFaro, where we're looking into solutions that can truly impact the world and have solutions that are sustainable and economically viable. And these two examples, one is a food coloring dye produced in a completely different way, and the other one, BioFaro, is a biopheromone system to act as a biopesticide, let's say, that can be deployed at a scale that is commensurable with traditional practices in agriculture. So I think within Novo Holdings, we're very committed to that sustainability image. That's why we're going to that space. And that's a relatively newer area. And we're seeing very exciting companies in the alternative protein space where we want to play a more active role too. But on top of all of these investments in the sustainability, I also agree with Anta that big data and AI are going to play a big role. And from our growth team, we have invested in companies in this area that look at massive amounts of patient data, are able to select specific patient populations to go into specific clinical trials, expedite that process, but also within the drug discovery field, different AI-based tools that can help med chemists do their job better and faster. And there's just finally to come back to the initial topic that we're talking about, the trade sales and having seen a lot of activity. I think what we should be talking about is the fact that one, there's tremendous big rounds being done, and there's been an extremely active IPO market this year, right? So if this market doesn't continue, how are these companies that have raised significant rounds going to exit? Because the trade sales on those is going to be tough. So it's going to be very interesting to see if the IPO window remains open or not, and if the markets remain as dynamic as they were this year. Because if that isn't the case, some of the companies that raise 100 plus and have really big valuations, they're going to be in a tough spot for trade sales.
Thank you. Karin, would you like to add to that?
Yes.
Sort of the breadth of your portfolio at LSP.
Yeah. I think what we have seen in terms of digital transformation, we have invested already before in companies that keep patients out of the hospital by managing them at home, or improving communication from doctors, hospitals with patients. And there we have a company that has actually helped New York hospitals to communicate with the patients that were in for testing, and communicating with them if their COVID test was positive, if they have to come into the hospital, and when, if so, where. So there was already a portfolio company that was making real impact with their digital solutions. Another company keeps out patients from hospital by managing them at home. And we have seen, especially in the US, where the pandemic is much more worse than in Europe, that request for such technology has risen significantly. On the M&A front, I see the developments a little bit more differentiated in the sense that big pharma companies have their own issues, supply chain, manufacturing, clinical trials. They're huge organizations, and they have to somehow every day shift their priorities currently on what is more urgent, because there are differences in how they operate and interact, and they also have to find their way. And biotechs are much more flexible, and big pharmas is just many more people to manage. So they are the typical investment areas that are hot and where we see acquisitions. I think that before COVID, there was already a trend towards collaborating with earlier stage companies and acquiring later stage companies that can add to the commercial perspective and driving shareholder value for big corporations. And that trend probably will intensify over the next years. We have a lot of great interactions with big pharma in our portfolio, and I think that that trend will continue, also to the point that there are more bigger rounds. To draw what João said is that I think the VCs have changed also the way they see companies. 10 years ago, and Gkelou is a very good example. This is a platform company developing vaccines for Ebola and other infectious disease companies, was successfully sold, great success for our firm, to GSK, because they had a platform. And you could spin out different vaccines out of that platform, which is still in use. And very little money went into the company, and that made an early exit possible. Now that we are financing the companies more, is not because there is unrational capital around. We are still extremely capital rational, but we want to develop the companies more and more to generate more biotechs and more Modernas in our ecosystem that then can fuel the eco environment more. And I think Argenx is a very good example of that, and many others in European biotech, that investors are not less capital sensitive. They just look more long term to build really platform companies or develop an asset into a real value inflection point. And when we just did the analysis across our portfolio, we realized that LSP has more products in clinical development than the big 5 pharma companies like Pfizer or Novartis. So having a long-term view pays off at one point, but it will just take a little bit more capital to go there. And pharma absolutely needs innovation and needs to interact and buy biotech companies. In the next years, I believe that it will be later stage deals like Myocardia, what we have seen, which will add to the revenue model of big pharma, and earlier stage companies could benefit from collaborations also, because then the company can develop other programs and grow more in the future.
Thank you. And I think we should also mention Kiadis in that same breath, being another, sort of fantastic success with the turnaround story. Simone, I know since we're sort of conscious of time, I think we wanted to talk about the lessons learned. And I think this is something that we can't ignore, right? And I think this is, I think, a really good point for you to come in on.
Yeah, so I'll agree with what everybody has said. And the view is COVID-19, what has not changed in the healthcare industry? Because everything that has been said was there before January. AI, building platforms, pharma companies not looking at anti-infectives, all of this absolutely did not change. We have just said right now that we do not think that we've been impacted by this so much because of the timings, because of the trends, because of the key drivers that have not really changed. There are a number of things, though, that did change. And these things we need to probably build upon. In a time of a crisis, we were forced as a community to rely on untested technologies because we could not do without. So mRNA vaccines that were a pipe dream suddenly become extremely important. A lot of other anti-infective technologies suddenly seem to be interesting. So I agree with John. Farmers do not pick them up, and they will not pick them up in the short term. But there is a window of opportunity for investors to actually build those platforms and show that they can bring value. I do think that people do not notice that under the radar, antivirals are still going very well. There's a number of companies that are working on HBV. That is one of the biggest burdens around. And antivirals are going to be important because the business model for those is not as difficult as it is for antibiotics. But are we going to actually, as Anta said, going to start putting public health on top? Are we going as investors to be able to steer this so that we want to see companies that stay in the long term, that stay in Europe, that build themselves like BioNTech, but are able to actually work in partnership with government that is sponsoring better patient outcomes? These are the lessons that I don't know if we have learned yet, but we have a window of opportunity to actually implement them.
Thank you. I think, João, you might want to pick up on that, given the repair fund and
Yep.
Novo's involvement.
Yes, yes. And to both Simone's and John's point, yeah, it is very true still that the business model is not there, right? So from the pharma side and from the investor side, there's still no appetite to do anything within the antibiotics. And that's the reason why in the first place we created the Repair Impact Fund. And this year in a consortium, we built the AMR Action Fund. What I think this crisis has brought to the field is that it raised awareness to the public about how this can be a big issue. And when the public realizes that there's a big issue, then the politicians and different healthcare systems have room to act and do something different, to change the way the business model currently is. So right now it's really tough. We have really good companies, develop really good products. And when we have amazing antibiotics for resistant bacteria, we don't want to use them, right? So that's a very counterproductive way of running a pharma company, having a product that you don't want to sell. So the business model needs to be different. And we think, for instance, business model like a subscription one, same thing that we do with the fire extinguishers. We don't want to use them, but everyone has them in all the hospitals. We think that this is the right way to go. But for that to happen, the public needs to be aware that this is a problem. And that will enable politicians to make changes. And I think this is what this crisis has brought. And once those two pieces are in place, then the pharma companies will realize that there's something that they can invest in, as well as the rest of the investors. And in the meanwhile, through the Repair Fund and through the AMR Action Fund, we'll continue investing in these companies so that we can have a strong pipeline in the long term. And even more importantly, that we can have people that have been trained and are running these companies. They just don't go and start other kinds of companies. So we need to have the pool of expertise. And we need to have a pool of scientists that are continue developing the solutions so that in the future we can have them and we can use them when needed.
I think you're absolutely right, João. It's not so much a problem of whether somebody wants to invest or not. It's a structural problem that first has to be tackled by our society and by public officiaries, so that then there is the groundwork done to invest again and drive innovation. Yeah.
And
If I can
add to that, sorry, no, go ahead, John.
Yeah, so just at a point, yes, I do agree that it is something that needs to be discussed and rejigged together with healthcare policymakers. But we have two different ways of dealing with healthcare. We have a European healthcare that is very much centralized, where the national governments have the power to actually shape this, and you can actually go and have a national or European conversation about this. You have a Chinese healthcare system that is completely opaque to us, and we don't know if we can actually bring those solutions there. And we have a US healthcare system, which is probably the most profitable, but the most dysfunctional that we've seen. And there, what has happened with COVID is probably going to allow us the hope to be able to restructure at least one of the most important parts of the healthcare system, which is primary care. So there, telehealth becomes extremely important. It is a population that is divided by being super urbanized or very rural, but in any case, you have problems of access. Doctors are not able to see you properly. Everything is kicked down the road to specialists and then to the hospitals. I think that if you do invest in digital health and in telehealth, this is probably a short window of opportunity to work with a new administration that is coming in that seems to be sensitive to these issues and start pushing for a real change in the way at least primary care is administered. And this might open the door to a very large number of alternative care investments.
So the other way around, Simone, is that investors invest in technologies where there's an infrastructure to get the drug to the patient. Because infectious disease, it doesn't matter where it is and what kind of benefits patients have from their healthcare system. If there's on the ground not the incentive to diagnose and treat according to a guideline, then there is no way that investors can see their investments reach the patients that they want to target. So I find that extremely interesting that this is all over the world the same, in infectious disease at least.
You know, I think we hope that we can't afford another public health crisis like this, sort of stopping the world. So I'm really hoping that this year or coming into 2021, we will see a step change. But as we're coming to the end of our hour and time's flying, I thought we could sort of just do a quick round of like top tips that you'd like to give companies that want to reach out to you. I mean, there are people at this conference at Genesis and, you know, people who'll be watching this video for the next few weeks. And, you know, maybe if we could go around and just sort of, you know, think things you like to see, your, you know, what you love to see and your pet peeves as well. And what are your therapeutic, so any areas that you're interested in at the moment? Should we kick off with John again?
Sure. I think my guidance to you know, people looking to raise money is relatively straightforward. One, do your research on the investors and understand exactly, you know, who might be interested. There's no point spending time reaching out to people who you're clearly out of scope for. And also it'll help you prepare, you know, your pitch to tailor it to them. And that's kind of point two, which is make sure that you focus on the key elements that will resonate with that particular investor. There's nothing more frustrating than, you know, someone spending 90% of the time telling you that oncology is a large market and then 10% of the time on the science when you're a science-driven investor who has invested multiple times in oncology. So getting that balance right, I think, is really important. And then the final thing I guess I would say is have a really well-crafted elevator pitch or executive summary that captures what actually makes you different and why you think you have a probability of success that is, you know, greater than zero. Because a lot of companies don't communicate that clearly at all. And so it's actually really important to be able to do that in a very succinct way, because, you know, when we talk about things internally, we see hundreds, you know, 500 plus opportunities a year. If you can't quickly articulate why yours is one worth doing more than about half an hour's work on, you know, there's a chance that it will get missed over, even if it's a fantastic opportunity.
Anta, would you like to go next?
Yes, John has covered the key aspects, but to add on, and we back up people. So I think making sure that the expertise, the talent, the background, the track record of the team, across through your slides, obviously during the meetings as well, that's very crucial for us. We do invest in serial entrepreneurs. You know, we talked about Corvidia briefly. It's a great example of that. We backed up Michael Davidson several times and always been a success story and a good return to our funds. So there's a human element to our investments, and I think we cannot stretch that enough. The second part that I would like to point to is the fact that we really science driven. Obviously, João also mentioned And we do spend a lot of time looking into scientific discoveries across the world. We've built companies in corners that you wouldn't expect that there would be a company building. That we think it's clear for us that in Europe, but also in the US, science has no frontiers. So discoveries can come from everywhere, and we're really proactive into finding those great scientists and great discoveries, and bring the right talent, and obviously, as we talked about, entrepreneurs and scientific and drug development support to drive that company from an idea to a. I think that's overall what a should focus on if they come to see us. And last, just to add a bit more to John's point on differentiation. I think it's taken for granted a lot of times. The majority of that deck, your pitch deck, should tell us not what you have, but so what, and what is that going to bring to what population? What is the need you're trying to find a solution for? What is your solution, and how you're going to get there? And then the rest, a lot of it is chemistry. We build relationships with our companies, with their people, and that's also one of the aspects that at Sofinnova we pay a lot of attention. And diversity is key for us as well, from the portfolio companies, the companies that come and see us, from where they're coming from, what their background is, and that also is reflected within the Sofinnova team as well. We're a very diverse team of 40 people, 16 nationalities, 13 languages, and we try a lot to build those links and connections with all innovation hubs in Europe, US, and Asia.
Thank you. Simone, would you like to go next?
It's going to be a case of all of the above. So I'm not going to go for the people, for the companies that are already good. They know they're good. They're going to send us a good deck, and they're going to be looked at, and we're going to talk to them, right? And they're going to have good science, good teams, good investability, and a good track record. What we know how to do, though, also is for example, sometimes some new teams and some new opportunities might arise, and these potential opportunities don't have all of the things around, but they do have a path, and they know how to get there. So if you're missing some of these elements, but you know what they are, you can actually show us a pathway to de-risk this. You really truly believe that you're different. You really truly think that people have not seen or that you can actually show a path to excellence, then show it to us. We are very science driven, but we also know how to build companies. We also know how to put companies forward. One of the things that INKEF is different from other funds is that we have a 20-year cycle. We're there for the long run. We know how to look at companies through all of their development, and we're placed to be able to look at them in the long run. So we act very often as partners in the companies that we invest in. We're going to be able sometimes to fill in those blanks. But so don't be afraid to be in a sector that might not have been looked at, because we actually know how to take a look at these things. We do invest in digital health. We've made a number of investments. We have the capability to analyze it. We have a very strong tech team, and also inside we do have the capabilities to do that. So if you're good, it's going to shine. Just don't be sloppy. Do your homework. Make sure that all of the elements are there. Practice before you actually send us a deck. Practice before a call so that we don't waste 30 minutes in understanding what your path is. And then if you're good, it will shine.
Thank you. João?
I think I echo most people's comments. Just had a few things to add on things that we normally like to see. We're very early stage investors and company creators. So we like to hear from scientists where we're not afraid of discussing science. And I think that's been a topic that everyone mentioned. We have like novel biology, novel mechanisms of action, first-in-class approaches. So that's all very important. And then just two final comments and suggestions. One, for the early stage companies, not to focus their time on doing fancy financial projections because they're not going to mean much, and instead focus on thinking what your clinical trials could look like, how long would be the duration, what kind of biomarkers, what would be the patient subpopulations that you go after. And I think there'll be a lot more value if you have some thoughts there rather than spending your time on Excel. And finally, to Simone's comment on what are the things that are under your control and that you can solve, but also the things that you don't know how to solve, and just lay down what those questions are and what is your plan to solve them. Because oftentimes we see things that we can help you with. So even if we decide not to invest, there could be good feedback on some of the problems and challenges you're facing. So use your meetings with investors, not just to try and secure an investment, but also to get their opinion on your deck and on your challenges. So then you make the most out of everyone's time.
Thank you. I think we're running out of time, but a quick line from you, Karin, and we can wrap up.
Yes. So I like to tell young entrepreneurs they should think about their product as if they would have or would want to treat their grandmother. So think about your development steps and how you would like to develop it as if you would actually give it to a family member. And then think about if this drug or that therapeutic angle actually will reach patients to the point before. If there is no infrastructure to reach patients, then think about how you could reach patients in the end. And yeah, we are very opportunistic and agnostic. So we happy to have your conversation. We build relationships over the long term. And I fully agree with João. The best outcome is that you can also get feedback from us.
Thank you, everyone. We have to wrap up, but massive thanks for your time and for your candor, your insights, and your advice. And I'm sure everybody will take it on board. And we look forward to furthering this conversation, at the next Genesis or on Helix before that.